Welcome to the podcast series Talking Success, connecting the global FinTech community. I'm Stacey Jafta, and today I'll be chatting with Chidi Okpala, founder and CEO of Asante. Asante is a high-impact digital financial services firm focused on advancing financial independence and improving the well-being of underserved small businesses and individuals in Africa. Chidi, how you doing?
I'm doing very well. Thank you so much.
This has been a long time coming. We've been trying to organize this, I think, for close to 2 years.
Yeah, I know. There's a lot to blame, starting with the pandemic.
I'm glad we're finally doing that. There's so much more, I think, to cover now more than ever. We've been working together for a couple years. We've seen how much Asante has grown, and it's been so amazing walking alongside you guys. Before we dive any deeper, can you give the audience some background on yourself and essentially what led you to build Asante?
Yeah, thanks. So, I always start with my nationality. I'm Nigerian. We're known for being aggressive, being highly knowledgeable, and wanting to do what should be done in 3 weeks' time. Last week. Yeah, but essentially, look, I grew up in Nigeria. I schooled there, my first and second degree. Then I later went to London Business School for another second master's degree program. In terms of my professional life, it's been largely financial services, spent about 15 years in a commercial bank, UBA, United Bank for Africa. In between my stay at UBA, I went into consulting with Accenture, and I worked both in Lagos and Johannesburg offices. And that was actually where I cut my teeth in payments and everything digital, because I was sort of privileged to be part of the core team that did a lot of the foundational work that has resulted in today's fintech industry, not only in Nigeria, but in West Africa. So firms like InterSwitch, Unified Payments, eTransact, I was part of the team that actually, built those businesses from scratch. But eventually I left UBA in 2012 as I was overseeing their personal and business banking across 19 countries. And I joined Bharti Airtel, where I became the founder CEO of Airtel Money. And I literally, built that business from ground zero. Okay, got all the licenses, hired all the people, put the systems in place. And we did a whole lot of heavy lifting and then built out that business across 17 markets. I'm so proud to say that today is one of probably 5 or 6 fintechs that are unicorns in the continent. And then I eventually went to Atlas Mara as the group MD for digital and fintech. Spent about 3 years there, and that was actually where I founded Asante as a corporate venture. Obviously, it was called Atlas Mara Digital. But then when Atlas Mara was acquired by a Canadian private equity firm, it didn't really sit well within the broader strategy of the PE firm. And then being the founder, being my baby, I made an offer to the board, and eventually I acquired the business by way of a management buyout. And today you have Asante, which I'm now running based in Nairobi. Yeah.
What a lovely story. So you came from a corporation where you were building a business, but with somebody else's resources. Now you've started your own company where you need to be more risk adverse, but at the same time, ballsy and try new things. How did you find the balance?
Well, at first it was a big shock because there are 2 different worlds. I'll be honest with you. The corporate world is completely different. I mean, I did quite a number of venturing in my corporate life, both within UBA, of course, in Accenture, and Atlas Mara, and of course Airtel. But it's a different ballgame because number one, you have the organizational resources behind you, okay?
Exactly.
Which is tested, which is proven. And whatever the venture is a side gig for the large corporate. Okay, it's not the main business, and so the business could have. Failure was actually an option, and the business will still move on, and you probably get another role within the large organization.
Yeah,
and of course you're using someone else's resources. and leveraging all the assets and capabilities of the big organization. Running Asante is a completely different playground. It's my reputation is at risk, my personal resources is at risk, the resources of friends, family, VCs, and diverse kinds of investors are brought on board, and even lenders um, are also at stake. So there's just so much that is at stake, and for me, failure is not an option.
Yeah.
And so, and in this case, being the founder, all the decisions essentially roll up to me because I'm principally accountable in terms of, building the teams, choosing the systems, the finance options, and so on and so forth. Yes, of course, I have to hire people to help me do that, but ultimately, I'm principally accountable. If the business fails, I'll be the one that will be held accountable, and the losses, will be incredible because it's not just
Yeah.
financial, but of course you have reputational and professional. So it's a completely different game, but the I would say the corporate world prepared me better. Um, uh, would it have been better if I left much earlier? I don't know. I mean, the jury is out, but I think I'm better prepared. I've come into the startup world a lot more mature. I know what the drivers of businesses are. From day one, I focus on unit economics. So for me, it's not a valuation play. It's about building a business that is sustainable, that is profitable, that is driving real value to the communities that we serve. I'm also being trained. I have more than 20 years, professional experience. So I understand risk. Okay. So I know the minds that are out there. I know how to navigate them properly. So at times it may seem as if I'm moving slower, but I'm always conscious of the fact that, look, this is not a 100-meter dash. This is a marathon.
Yeah. Can
Yeah.
you give an example where you probably would have taken the risk with your previous business, but with Asante you chose not to? Can you think of any moment?
Well, I mean, look, it happens it happens everywhere. Okay. Because, let's even start with people.
Hmm.
So typically within a large organization, um, when you are setting up a corporate venture, the resourcing will be a hybrid of people that are transferred from other divisions within the business and people that you hire into the business. And so you can afford to take a risk on the people that are being transferred from the other divisions because look, if they underperform, it's so easy for you to reassign them. Okay.
Yeah.
Um, in Asante, there's nowhere to reassign anybody. If you're underperforming, you're out. Okay, the door is open, and you're let go. And so, and it's heartbreaking. Okay, not just for the people that I'm letting go, but of course for myself because a lot of these people have families and so on and so forth. And so there's a lot more scrutiny and rigor
Yeah.
when it comes to bringing people on board and across all levels, not just at the people, the members of my executive team, but even, down to the analysts that work with us.
Yeah.
We have, very robust frameworks in place. We have an, well tied up recruitment process that we make sure we follow. And the whole idea is just to make sure that, look, at every level, for every function, we top grade and we make sure we bring the right people, not just in terms of competence and capability, but the right level of passion and commitment, and that they believe in our story. And we think that's actually important. Um, one of my teachable schools of thought is the fact that passion is more important than competence. And the reason is
Yeah.
because, whoever is competent but is not passionate will not last because it's there for something else. But whoever is passionate and not that competent will certainly learn. And over the last 20, 25 years, I've found that out. And so making sure that there's a right connection in terms of bringing on board people that believe in our story, believe in where we're going to, and are passionate about joining our movement is so critical. If not more important than competence and capability.
Yeah, I love that advice. We've noticed as Helen and Cloud, because we've worked together on some really vital roles for Asante, we noticed straight off the bat what a great reputation you have in the industry. As soon as we mentioned, first of all, your name, we have candidates that before would have never decided to interview, be like, listen, for Chidi, we're so open for it, let's go. What do you think you've done to attract the right talent?
Well, I mean, look, it's a combination of so many things. I think first is my personal track record, okay, because it's easy to look it up on LinkedIn, to call a few people. Oh, look, there's this gentleman called Chidi. What do you think about him? I've built and worked in teams across 24, 25 countries in Africa. So it's not difficult, especially if you're
Yeah.
African. And even if you're not African, it's still, fairly easy to run a check on me. Okay. So I think that's important.
Also, fintech in Africa, everyone knows everyone.
Exactly. It's small, it's big, but it's just tiny.
Very small.
It's a tiny world. Yeah.
Very
So,
tiny, yeah.
so it's super easy. But I think the second one is the Asante story. We have a compelling story in Asante. We are so it's not a case of the herding effect. Okay, just because people are doing fanciful things, maybe crypto is in vogue, we'll get into crypto, online payment acceptance is no. That's not what we're doing. This is a movement. What we're trying to do in Asante. We want to drive inclusion in Africa, but at the same time, empowering and improving the well-being of Africans. And if you look at the way we designed the business, we are building a digital bank for small businesses. What you call the micro, small, and medium-sized enterprises. These guys, there are probably about 145 million of them in Sub-Saharan Africa, according to the World Bank. They are the drivers of the economies in Africa. They are the largest employers of labor, in excess of 60% in any market, whether it's South Africa, Nigeria, Kenya, Congo DRC, Gabon, wherever you go to. That's where the people are employed. And so, and sadly, they are considered as untouchables when it comes to financial services.
Yeah.
Banks don't touch them. All the banks do is just to take their deposits and at best offer them payments, but they never lend to them because they don't trust them. They don't believe in them, whatever they do. The MFIs that were actually set up to service them don't have capacity. There's no technology leverage. They don't have scale. They don't have distribution, and so they've not made any impact. Okay, and so these MSMEs need a different kind of financial services provider, and that is what Asante is. And so we've started off with credit. We're credit led, and we devised a unique model to be able to extend credit to them in a responsible and sustainable manner. And then on the back of that, we're now beginning to expand the range of propositions that we're offering them. And that explains why we are pretty successful so far. I mean, obviously, we're just starting, but there's just so much we can do. But we've been able to build a solid business, measured not just on the financial metrics, but if you look at the caliber of partners that we have as a business, it says a lot about, what we're doing, where we're going, and how we're doing what we're doing. And I think that's important.
It sounds like the success has been pretty organic and the reason that you've been attracting this talent. Do you have any advice for maybe businesses that have been around for like 1-2 years, very early stage, that would like to build a reputation like this? Is there any like tactile advice that you could give?
Yeah, look, I think first it starts with the fundamentals. Don't build a business for valuation. Build a business, okay, that is solving a real problem, that is meeting the needs of a defined market segment, but at the same time, execute for the long term. Again, another teachable school of thought for me is think big, have a big vision, massive, audacious, but start small and scale fast. Don't, I always tell people, stay on your lane. Okay. Yeah, stay on your lane. It's good to know what competition is doing, and it's important because you need to know, and where you have to copy shamelessly, but don't measure yourself against competition. Measure yourself against your past.
I love that.
Put yourself on a path of sustainable and consistent improvements on your past, and 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 just watch yourself where you're going to be in the next 3, 4, 5 years. Because what typically happens is, I'm seated and maybe I'm a payment processor, and I hear that look, a particular firm they've raised $200 million at this valuation, and then you want to do the same, but first you don't even understand their business. You don't even know. Probably they've been lucky, maybe timing, because there are so many ingredients to the results of each business. And so
100%.
and so you need to just stay on your lane and figure out your own growth path and drive it consistently.
Okay, keeping on the topic of staying in your lane and not comparing yourself to your competitors, talent has been an issue, right? And we so often look to the big guys or our competitors with the type of talent they have, but maybe it's not affordable for the stage of business you're in right now. How do you, as Asante, hire top talent that can grow in your business when you don't necessarily have the funds to compete with the big guys?
That's a huge challenge.
Yeah, massive.
Yeah, I would say that my number one challenge as CEO of Asante is being able to build the right team, the right bench, okay, and keeping them productive, keeping them engaged, and remunerating them well, compensating them very well. It's a real challenge, especially in certain areas like in data science, where we have a large team of people, and of course engineering, but across board generally. It's a challenge. A lot of times, you may find, especially at the executive level, because I do a lot of benchmarking. I look at some of my peers. For example, I want to hire, for example, say a CFO. I look at the CFO of a firm that I aspire to be like. And it doesn't have to be an African firm. It could be a firm in the US, it could be a firm in UK. And I look at the profile of the CFO of that firm. Okay, I can take a company like Square, for example. Look at the CFO, look at the profile on LinkedIn. And I said, look, I'm looking for a CFO that has this kind of spec, but obviously with some customizations. Now, the challenge is because, I don't hire for today. I hire for tomorrow. Okay. I want people that will walk this journey with me over the next 5, 10 years. And so most times I'm unable to afford them. And that's a reality, okay? Because when you find them, most of them are in corporates, or even when they're in startups, they've been locked down with stock options and so on and so forth. And so the challenge is how to come up with the combination of a story and a set of incentives to be able to attract them and to be able to keep them. It's extremely difficult. I'm not saying it's something I'm getting better at
Okay.
Every day. We're not there yet, but I think one of the things I'm pretty proud of is with each new hire, I'm seeing improvements in quality, which is a good sign. So we're on track.
Scott, could you design a video game?
I could make you a hypothetical one. If I took some random genres, mechanics, maybe blended them together, and created a new hypothetical game.
Now that would make a great podcast.
Undoubtedly.
So what would you make? Something original and exciting? A Dark Souls city builder? A co-op roguelike?
Everything. All of that. We could use the Nemesis system and put it in a first-person shooter. And we could have a loot system with survival mechanics and motion controls. And maybe you could... I don't know, save a kingdom from some out-of-control toasters. What about party?
Catch the Gaming Blender on all your favourite podcast platforms.
What have you done? You said that there are certain things you've started doing, incentives. What are those incentives?
Well, I mean, broadly speaking, the first is to create what we call the best place to work environment. So we set up a program sometime last year, run by our chief people officer on a set of initiatives that will help us to create that best place to work environment for the firm. And it has several initiatives within that. And so we've started implementing them. For example, we had to move to a new office, great location, fitted it out really nice, and set it up properly. So that, people spend 8 to 10 hours in the office on a daily basis. How many hours are we awake in a day? Okay.
Yeah.
And so you need to have the right kind of environment to keep them engaged, minimize the stress level as much as possible, and maintain an atmosphere of excitement while they're there. That's important. So we've done that really well. And I think that the second one is around engagement. So we have almost obviously on a weekly basis, we have sessions with all staff where I speak to them. And I actually speak less, but I give them a lot more opportunity to ask questions, raise issues, throw up comments, and provide and provide any sort of feedback. We do that. We also have learning sessions. So we have a lot more sessions where not just myself, but my leadership engage with the entire workforce, not just the people in Kenya, but across all the markets where we have a presence. And this has really helped us because people know what we're doing. People know where we're going to. And it helps them get engaged. And it has glued us. And so we've become a formidable force pushing one agenda rather than people being in silos. And I think that has really helped. The other thing is we introduce a chain of financial incentives, from not just compensation, but to bonus, to an annual enhancement, inflationary adjustment, and of course stock options. So we have a bouquet of financial incentives that we've recently rolled out, just to make sure that look, people are compensated for the effort that they're putting in, because our people in Asante work really hard. And I think it's important. A laborer, as I say, is desirable of his or her wages, and I think that's important. But again, what we've also done, which I'm proud of, we partnered with Udemy and came up with a robust staff training and development program. And so there's a consistent, over and above the training that people receive in the course of their work. We worked with Udemy. We designed both customized programs and general programs. And so at any point in time, people are attending courses. People are learning all sort of stuff.
I love that.
They're understanding the business. And, the way we've designed it, we've also tied it to appraisal system. And so just like, when you're on campus, you have your hours that you have to clock for each subject.
Wow.
So
Wow.
we've done all of that.
That's super cool.
Yeah. So at times maybe, someone is done with his work at 5 p.m., he logs in, and he's attending a particular training program, maybe on data science or whatever. So it just keeps. It's now a learning organization because people at all levels are always learning, which is beautiful.
I can hear so much passion in your voice. What inspired you to build Asante or build a business for Africa?
Well, look, I am African and I'm a proud African. Africa is a unique continent. We've suffered from prejudices, and we still do. And there's this, so-called Afro-pessimism that nothing good comes out of Africa. And so for me, I'm one of those that believe in that philosophy that, look, Africa has to be developed by Africans and not by non-Africans. And so I've taken it as a personal challenge. And I said, Chidi, what will be your contribution to Africa's renaissance, to Africa's development, to changing the narrative in the continent? And this is actually one of them for me. So yes, there are financial, commercial, upside in setting up a business and so on and so forth. But much more important for me is the developmental angle, being able to create a platform uh, that empowers businesses to run successfully and profitably, employ people, grow, scale, impact our economies, and so on and so forth. Becoming the real drivers of sustained, real inclusive economic growth for the continent, and that's actually what we're doing in Asante. So that's what gets me awake every morning. Okay,
I love it. I feel inspired.
being able to
I
do
feel
this.
ready to go. Chidi, you've gone through a few funding rounds and you're in the middle of another round. What have you learned from each new fundraising?
Yeah, I mean, look, it's a so the way I like to say it is, and the advice I provide to other founders is fundraising is a learning exercise. I always tell myself when someone tells me no, I try to get a session with you because I need to understand why you don't want to invest in us.
Mm.
And 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 you take a lot of feedback. Okay, I see a lot of people say, "Oh no, this VC said no to me. They are this, they are that." No. I don't think it's right. And so for me, fundraising, we've had about 3 rounds,
Okay.
essentially. So I had the very first, which was myself, family, friends, putting money together to be able to acquire the firm from Asante. Then I had a second round or seed round where I put together a bunch of my former colleagues in Atlas Mara and a few other friends. And then we had our first institutional round, which was last year, where we raised about $7.5 million, led by Goodwill, or Goodwill with participation of firms like Sorensen Foundation.
Mm-hmm.
So that was, compared to the first two that we had, that was a different experience because we brought on board institutionals. The conversations, the engagements, the issues that were discussed, the issues that came up were pretty different than the issues that came up there. And then now we just started launch our Series B. We're launching on Monday, our Series B, and the conversations are a lot different. Not just because obviously because of the success we've recorded so far, we've actually been approached by a bunch of firms that want to anchor the round and so on and so forth, and of course existing investors. So the set of conversations we're having today are completely different from what we had in the Series A and of course the rounds before the Series A. But there has to be a balance. Okay, while for every round, every founder, you want the best, the highest valuation for yourself. But there has to be some moderation, okay? Because the valuation has to be a reflection of where a true reflection of actually where the business is. Because if it is not, there's a tendency that a subsequent round will be a down round, and nobody wants that. That's the worst thing to happen to any founder or any business. So I think that's the first in terms of setting that expectation. Okay, where do we want to land as part of this round? But the second one is we can now afford to be selective about the sort of investors that we're bringing on board. So it's not just 2 weeks ago we turned down. There was a group that came. And my question is, okay, yeah, besides your millions of dollars, what else are you bringing? And for us at the stage of our business, that is super important. We need investors that bring strategic value, okay, either via partnerships or help taking us into markets or giving us sustainable funding, like our engagements with a couple of DFIs. So there are a lot of considerations for us beyond just writing us a check. And for us at this stage of the business, and because of where we're going to, that is not so important because we can afford to have options today, unlike, Asante of 2 years ago. And so it's really important that, businesses, as you grow from one stage to the other, you need to begin to redefine what is important to you. Money will always be important, but there are things that are a lot more important than money, and that's critical. And I guess the other part is around, making sure that, there's an alignment between the not just the CEO or the founder, myself, but myself and the executive team, and then myself and the existing investors. Because if that alignment is not achieved, then you'll find out that each party will be speaking from a different page when prospective investors engage them, because they will, as part of the due diligence process. So we've actually spent a lot of time. For us, it's taken us probably 2 months to drive that alignment between ourselves and all the shareholders, to make sure that, look, all the issues they've raised around what is important, what's critical for the round, that we've achieved an alignment. And we've just got some of the approvals. I think the final approval we got last week. Hence the reason why we delayed the round to next week.
Chidi, thank you so much for joining me on this episode. You have shared so much, and I'm so excited for the rest of our audience to take a listen to this.
You're welcome. And thanks for the opportunity.
Where's the best place for listeners to reach you?
Well, I'm on LinkedIn. Anybody, I'm quite responsive there as well. If there's anything, you can send me a mail or a note on LinkedIn, and I will readily respond.
Perfect. Thanks again, Chidi.
Thank you.
Thank you for listening to this week's episode of Talking Success, Connecting the Global FinTech Community. Feel free to follow us on LinkedIn at Talent in the Cloud. And if you're interested in exec talent, expanding your team, or you yourself are looking for a new, exciting change in your career, check out our website, talentinthecloud.io.